Hello everyone, welcome to this next edition of Market Rubru. Over the years, we have been showing a lot of features of TradePoint, and as a lot of people are aware that earlier TradePoint, which had only real-time FNO data, was a paid software. But over the last 6 months, we have started a brokerage Definedge Securities, and in that we have lots of features of the old TradePoint and more, of course, which are in the basic version of the TradePoint, and for which the trader doesn't have to pay anything. In fact, the 180 rupees brokerage opening charges are also waived off in the form of free brokerage. So essentially that 180 rupees also becomes free as soon as you generate a brokerage of 180 rupees. And apart from real-time FNO data, we also have real-time data of every single segment, which is BSE cash, NSE cash, currency, commodities, which includes crude oil, gold, everything. So as you have all seen over the years, we have been posting charts of point and figure and Renko. Even for gold and crude oil, the point and figure and Renko charts are very useful as they are for other instruments like Nifty and stocks. So today I have with me a trader from Bombay, Mukta Dhamankar, who has been in the market for more than 15-20 years and a very active user of TradePoint, and she has attended a lot of, she has spoken in a lot of seminars which we have organized. And she has a unique method of constantly tweaking some systems which are commonly available and bringing something new to the table and adding some more element to it, to the analysis. And of course, these are all features which are, like I said, freely available in TradePoint. So let's see what she has today. Welcome, Mukta.
Thank you so much, AP sir. Ever since being a TradePoint user and almost 6 years now that you have introduced me to the noiseless charts. So since then, I've been always watching these videos of Definedge. Every weekend there is a new video coming, nice concepts coming up. And every time I used to wonder that AP sir mujhe kab bulayenge, and finally the day is here. So I'm so happy to be here to present what I'm doing in markets. And thank you very much for the opportunity.
Yeah, so let's start with what your title is saying is ratio charts and market breadth. So basically, you're going to talk about two different methods of observing and studying and trading, right?
Right. So I use ratio charts and market breadth to understand the structure of the market. So the story, a small story behind why I started using the ratio and the market breadth was every time as a trader in the initial journey, when every trader is a struggler, that time I used to always land up buying something which used to be totally heated up, and the meaty move used to be over, and that's when I used to get into the trade and then get stuck. So I started wondering that irrespective, later the trade used to work in favor, or sometimes you had to exit with the stop loss, but why this late entry used to happen. So that made me come to explore more about markets, and that's where market breadth helped me. And ratio charts, of course, was because if I invest in markets, I need returns which are more than what markets normal investments would do. Like if Nifty is moving 2% up, then I want my investment to move at least 4 or 5% more than what Nifty is giving. Otherwise, why should I take that risk of investing into markets if returns are not, astoundingly more than what the normal investments? I would have rather kept my money in FDs or some, national savings certificates or something like that, wherein the money is safe and I know it's going to be guaranteed back. So when I'm taking that risk, I want that kind of manifold returns in it. And that's how this ratio chart concept is what I started reading more. And I found a lot of material from the Definedge on the inside. There are tremendous number of videos which Prashant sir has done. And in fact, his book on market breadth is what I definitely recommend to all the readers. So whoever want to further enhance their skills or add any more essence to what these ratio charts and market breadth, and go further into the research, there is so much to explore. And his book is like, I would say, Gita for me, because whenever I have free time at times, in the evenings you are free. So what do? I just open that book, start reading from somewhere. So every time there is something new to explore and something new to add to your study. And yes, these charts work wonderful in markets, and they give you an edge over the other, indicators, oscillators, whatever. Of course, price is Bhagwan, bhav Bhagwan hai to hota hai. But to arrive at that price, there is a tool, and that is the ratio charts which I use and the market breadth.
Sorry to interrupt you. You use ratio charts for what kind of trade setups? It includes delivery or futures or options or, positional or what kind of trades?
Okay. So if it's short trades, of course, it is derivatives either via future shorts or via buying puts. I'm an option buyer. I'm not an option seller. So I prefer buying puts rather than, shorting calls. So if it's short direction that I'm looking at, then it's for the derivatives. But if it's long direction, it could be either your futures or it could be your cash segment also. So they work equally well on all kinds of instruments, all kinds of trade setups.
Okay.
What are ratio charts? There is a lot of material available on the Definedge website, and there is lot of videos which are done by Prashant sir. So you will have a lot of information from there. Just to brush upon what ratio charts look like. So they look like a line chart, and they are formed with a numerator and by dividing a numerator and denominator. Essentially, denominator usually is a benchmark. So I use usually Nifty 50 as the denominator. And numerator could be anything, right? From an index like a FMCG index or a metal index or Bank Nifty index to a individual stock as well, because we are assessing the strength of the index, and then we are assessing the strength of a particular stock from that index. Because when a particular index is rising, not all the scripts from that index are rising. We want the outperformers, so that if we are holding those scripts in our cash portfolio, they have to start rising and start giving us good return more than what Nifty is giving us. So that is a thought process behind it. And when numerator is outperforming the denominator, the ratio line will rise. When the numerator is underperforming the denominator, the ratio line is going to start stooping down or falling. So this is how you analyze the look of the ratio chart, and then further go and use this information. This is like a Bank Nifty and Nifty ratio chart, wherein you can see Bank Nifty is rising throughout, and this particular leg in Bank Nifty was almost like a stupendous 1600 point rally that we could witness, and a great upside was enjoyed by the Bank Nifty's outperformance. So here we can see that Bank Nifty was outperforming Nifty.
Just one question: how important is the time frame? Because I can see this is a hourly chart.
Yeah. So usually what I do is I use a I start it from a top-down kind of approach out here. So I start with the weekly, I go down to daily, and I then go down to an hourly. You can still go down further to a 15-minute chart also. Below 15 minutes will be too much of a noise. So I feel 15 minutes is the lowest, and that too should be used only for scalping. I think 60-minute chart works best. I have seen it work really well over a period of time, that almost like 7-8 months that I've been following the ratio charts very ardently, and especially the Bank Nifty and Nifty. So 60 minutes is good enough. It gives you a good positional view, and if your positional view coincides with your intraday view, obviously it's going to work in your favor, because you are working in the time frame wherein your higher time frames are in your favor, and again your low time frame coming into your favor and going in the same direction as the higher time frame. Your risk reward also remains intact out there. So you will have lesser risk, and the reward would be better in such situations. So 15 minutes is the lowest. Definedge software gives you your 1-minute ratio chart. So if there is a scalper who just wants to make money, like maybe 50 points he wants to make in Bank Nifty, and he wants to look at what is outperforming, whether Bank Nifty is outperforming Nifty or whether it is underperforming Nifty, and he wants to take his position, he can go to a 1-minute time frame also. So For the viewers, we will also go to the software and we'll show them how a 1 minute ratio chart looks like. I am comfortable using an hourly chart, or least I would go is a 15 minutes, not chart. Less than that.
So this is more smoother, right?
Yes, this is more smoother, less noise, and it gives a clearer picture compared to a smaller time frame. The smaller time frame you go, the more fragments are going to be in there. So it's going to create more noise basically.
Yeah, like on any chart, on a smaller time frame, you will be tempted to catch too many tops and bottoms.
Yes, true. What we take the crux out of the ratio chart is numerator outperforming, ratio line would be rising. Numerator underperforming, ratio line will be falling. For a simple analysis, there is more complicated and more complications and more things that you can learn out of the ratio lines. But for a starting journey, you can use this information and begin off using the ratio charts. If you see in this particular case, this is a very recent example of Bank Nifty to Nifty. This is like from the 12th or the 13th of April to 19th of April. So 5 days of reading that I have got. We can see that Bank Nifty was at 41,557. Nifty was at 17,812. And when you divide this, you get a reading which is multiplied by 100 and you get this ratio line. The ratio line kept on rising because you can see Bank Nifty, in spite of almost a rally of 1600 points, you can see the strength in Bank Nifty till these charts are till yesterday evening. So 19th is the last day that the charts have been updated to, and you can see though Nifty has corrected from 17,800 to almost like 250 points down. But Bank Nifty has just corrected 250 points down, and that is essentially seen in this ratio line, that it is not coming down at all. Bank Nifty being strong, it is not allowing the ratio line to fall below and continue its move in the downward direction and joining the corrective leg in Nifty.
Sorry, this underperformance of Nifty was mainly due to IT, right?
Yes, mainly due to the INFI result, which was down, which brought almost INFI was down, and most of the components from the IT index were down. But here, if you see, the denominator was down. If you see this particular section where I have used this information, where the denominator is down, but the numerator is flat or less down. The numerator is essentially in this particular case, the ratio line kept on rising. So that indicated to us that unless there is a breakdown of a particular level, which the price will tell us that at below this particular level, there is a DBS which is coming. So at that particular level, then Bank Nifty would join the breakdown in Nifty, which is already started. And then the ratio line will start correcting in the downward direction. So currently at this point in time, what do we see is Bank Nifty is outperforming the Nifty. And hence, if you are looking at a price chart, you will find that Bank Nifty is not coming down as much as Nifty is coming down. In spite of a expiry day, we are almost like 2,230, and still on a expiry day, Bank Nifty is holding that 4,200, 4,100 level so strong since morning that if it had to get weak, then the entire thing will fizzle out and Bank Nifty will start joining Nifty and both of them will start heading in the downward direction. In that circumstance, Bank Nifty underperforming Nifty. So Nifty is already down and Bank Nifty coming down with it. That would be another opportunity. That is another way to look at charts and then taking your position accordingly.
Sorry, there is a lesson in this. When you're saying that Nifty was sort of going down, but Bank Nifty was flat, and everyone knows that Bank Nifty is almost 35% of Nifty. So which means that Nifty is unlikely to break support, which was created over the last few days, 17,550, 17,600, which also means that whenever Nifty comes near that support, you can look for longs in banks.
Absolutely. Yeah. I use RSI as one of the indicators which works really well with ratio charts.
RSI of the ratio.
RSI of the ratio, right. RSI of the ratio chart. And so here this chart that you can see is a Bank Nifty to Nifty hourly chart. The blue line, so the green and red line is the ratio line, and the blue line is SMA 30. And the RSI, I use the normal default RSI of 14 RSI. And there are two things which I see here. One is a ratio line above the SMA 30 indicates to me that the numerator is outperforming the denominator. At the same time, RSI also above the level of 50 gives me a hint for the the trend being intact in the upward direction for the numerator. So I would like to have a position in Bank Nifty in such places wherein it is outperforming Nifty and it's going to give me better returns than Nifty. Secondly, RSI helps me to see these divergences. So the divergences that we see usually in RSI with the line chart or with the normal candlestick chart, we also see such divergences in RSI and ratio line. So if you see here, there's a triple divergence. The ratio line kept on rising, but if you see RSI, it started making the lower highs. Ratio line making higher highs. The RSI making. So this was an indicator to me that there is something not right. RSI and ratio line are not in sync. So I should have my stop loss in place. At least closer, I can tweak my box size to, usually I use a 0.15. I should go down a box size lower, maybe to 0.15 and see if there is a triple bottom sell or there is a double bottom sell or a high pole forming. So all these indications which we use in the noiseless chart, if we are able to see it on the lower time frame, we should at least take home some profits, because when I am sitting in front of the screen right from 9 o'clock in the morning till 3:30 in the morning, and we are investing our not just money, another important resource, that is time, that we are giving into the market. So if I am investing two of my important resources in the day, I want to make money out of it, right? I just don't want to sit here and just look at the charts and market niche aa raha hai, market upar ja raha hai. Ye mujhe nahi karna. I want to make money. And such indications, such tools help me to be cautious ki, okay, fine, if I have a long view, I should guard my position with stop loss in place. Or if I have, say, 4 lots of Bank Nifty, I will at least take home profits with 2 lots, and then 2 lots I will trail to the double bottom sell or some support levels. If people are looking at the open high candlesticks, then they can trail to hourly candles or a 15-minute candle, whatever device a trader uses. Each person has his own trading skills and he follows his own methods. So but trail is important when you see such kind of divergences. Another information in this particular place, you will see there was a bearish hidden divergence. If you see, the trend was bearish, and this was a bearish hidden divergence which formed in the ratio line and the RSI line. But this bearish divergence started failing once this particular swing high was started getting taken out. And just imagine the strength in the index when a bearish divergence fails. A bearish a bearish indication failing is more bullish, and a bullish indication failing is more bearish. So here, when you have a failed bearish divergence, we know that, okay, this seems to be something not usual. Prices hovering, the ratio line hovering at this particular level at the SMA, and then this breakout continued in the upward direction, and almost like 1600 points rally is what Bank Nifty gave after that, which is really huge money in a trending market in about 7-8 days that you can make. Currently, if you see, there is this bullish hidden divergence which is forming. If you see this particular swing low of the ratio line and the swing low of the RSI. So it's making a lower low in RSI and the ratio line making a higher low. So I'm watching this particular level with similar kind of information in my mind. Either the bullishness continues in the upward direction, or if a bullish divergence, hidden divergence is failing, then I should be ready with my short trade. And here I would like to take short in Bank Nifty, which is going to be sliding, which is going to be underperforming Nifty. So this is a valuable information that we get from ratio chart using RSI. So it works really very beautifully in all time frames. It works on daily, it works on weekly, it works on 15 minutes as well.
In fact, I remember when Nifty was at 17,800 the last time, when it came down from 18,000. That time Bank Nifty was underperforming on a daily chart.
So here, if you see, this is a ratio chart in an RSI. If you see, there is a bullish hidden divergence. So this date was like almost 26th or 27th of March. On the 10th of April, this divergence formed. Once the ratio, the RSI started rising above the mark of 60, and you can see the kind of rally that Bank Nifty gave, almost 1600 points rally, and Nifty rallied only 174 points after that. So why we are talking about an outperformer is because of this. The kind of money that Bank Nifty gave and the kind of money that Nifty gave was way too different, and huge profits could have been made just with the information that there is a divergence, and the ratio line once starts breaking above this RSI is a hint in itself that, oh fine, this seems to be something in favor of the numerator, and numerator is going to start outperforming the denominator. In such cases, when you know that you have the numerator under outperforming, this is the chart of 10th of April. You can see I have marked out here. A simple trend line breakout started happening with an anchor column, a small retest, and this continued and played out so well that it could achieve even the second vertical count in the Bank Nifty, and good trading setup, like objective trading, if people are looking at, then point and figure or Renko charts, completely noiseless, and we can get perfect objective entries and stop loss. So a double top buy, if somebody would have got with a double bottom sell as a stop loss, he could have enjoyed this entire leg of rally upwards. So this is a Bank Nifty 0.15%. I said I follow usually the positional charts, that this is how it looked like when the initial breakout was happening and then after achieving the target. So works impeccably well, and this is just one example that I have got. There are other examples wherein ratio chart can be not just used with RSI, you can also use it with all kinds of indicators. I prefer RSI and Donchian Channel. So another example which I have plotted here is with the Donchian Channel. So here you can see the green and the red line, that is the ratio line, and the green line up and this red line down are the upper and lower channels of the Donchian Channel, and this is the mid band, which is the blue line for the Donchian Channel. This is chart, this is an hourly chart of Nifty IT over Nifty 50. So this was a study done on the 11th of April, just before the IT results were going to be announced. The TCS and Infi were going to announce the results, and I thought, let me look at what the ratio charts are telling us, what is the trend in the ratio chart for the IT index, and let me look at what the individual price action. Of course, ratio chart is a tool that guides us. Price action, that is the P&F charts or the Renko charts, are the charts that will help us take the trade in that particular setup. So here I find that IT charts, IT over Nifty 50 had already shown that it is in a downtrend. Donchian Channel making lower lows, and the highs are also, the upper band is also making lower highs, told me that this ratio looks to be bearish. So IT is underperforming Nifty 50. In the past, maybe 1 week's time, from the 11th, you can see that till the 22nd, 25th, it kept on underperforming. After that, or after the 25th, it went into a consolidation mode where the Donchian Channel also indicated that it is flat. There is no trend as such. It will go and hit the upper band, come and touch the lower band, upper band, lower. So it was not essentially doing anything as such. After this is on the 11th. You can see that there is a day separator, which tells us that this was the 11th that the Donchian channel made a new lower low. So the low was lower and even the high was lower than the previous high. Also, you can see the ratio line clinging to the Donchian channel, indicating that IT is going to further underperform Nifty 50. So the ratio line falling is an indication to us that the numerator is underperforming the denominator.
In this, can you go back to the previous chart? So it was very clear even before the results of TCS and Infi were announced that Bank Nifty is stronger than Nifty, IT is weaker than Nifty. So if someone says कि TCS का result बहुत अच्छा आने वाला है, be long in TCS, you can just show him this chart. No, this chart does not say so.
True, sir. True, sir. So after this information in my mind, I go to the price chart, because trade, after all, we have to take on the price chart. What do I find on the price chart is the prices are below the must cloud. So I use essentially must cloud and PMOX indicator to find out what is the trend. So must cloud is a combination of moving average and a super trend, which is the red cloud that you can see here. And the PMOX is an indicator which tells me that whether the instrument is in the overbought or oversold territory. Something I know which is into a downtrend, I would be interested in shorting that particular instrument when it is in the overbought territory, because that is where it has pulled back and it is going to continue its downward surge.
I have to just say two things. One is you have identified that IT as a sector is weaker than Nifty even before the results were announced. Number one. Number two, then you go to the Infi chart, which is a daily chart on 0.25%, and then you plot that with MUST as well as PMOX. As far as PMOX is concerned, there are a couple of videos on YouTube as well as Insight, which Prashant Shah has recorded. So basically what it means is when there is a red dot, it is overbought, but in a bearish zone. So which means if you see a red dot and the stock is bearish, that is the right time to look for a bearish signal.
Yeah, so I would look for a bearish opportunity, not at these red dots, which are in the oversold territory, because it's already telling me it is oversold. So I want it to pull back and give me a shorting opportunity again, which happened essentially out here, where, you know, the red dots were formed in the overbought territory. Plus, I have a information from the ratio chart that this is bearish, and the must cloud also bearish. This was an ideal double bottom sell as an opportunity. And we had the horizontal counts also indicating, and I think Monday it was pretty evident that Infi was 10% down after this. So good valuable information. Similar thing for TCS. You can see this is also the 11th April chart of TCS, and prices were below the must cloud. Here it was already in the oversold territory. So a rebound and a double, a reversal out here was a great trading opportunity for the bearish side. And I think TCS also was down, not as fiercely down as Infi, but it is almost like 200 points down from where the entry was. I think it is trading around 3050 now. What is the level?
3090, I think. 3090.
90. So about 110, 120 points down. So this is the information that you can gather from the ratio chart and implement it on the point and figure chart. So ratio chart is a tool that I use to analyze the trend of the numerator and denominator and the a stock or a index also. So you can use ratio chart essentially for identifying the sector and then narrowing down onto the stocks from that particular sector. So if you're looking for a bearish trade, you want to look at a bearish stock. If you're looking at a bullish setup in ratio chart, you want to fish out the bullish trades from that particular index in that.
Another thing is, since you have said how Infi and TCS were weak on the charts, that doesn't necessarily mean that you should short futures. You can take bearish trades in the form of options also, in terms of maybe a naked put or a call spread or a debit spread or debit put spread or a call spread. So whichever suits your temperament.
Right. Sir, in fact, I had taken a put of Infi at 24. I had taken a 1400 put at 24, and that went to 160 on the day of the result. So it was one of the days that it really shoots up like this. But yes, TCS, I had got a put of 3200 strike, which was at 44. And I had kept a stop loss of 31 for that, and it opened at 106 the following Monday. So wonderful trading opportunities I could, because I as I said, I buy options. I'm not more keen in shorting options. And so that is my mentality, or that is the way I trade. So each individual trader has his own ways of trading it. So multiple options are available when you have the right tools at hand, I feel.
Multiple alternatives, not options.
Yeah, multiple alternatives, I would say. Right. Okay, now let's go to the second part of the presentation, which is market breadth. So what is market breadth all about? Market breadth is a sentiment indicator, and it tells you how many stocks from that particular index are participating in the rally, or they were rally, or in the corrective move also. So if I'm looking at a particular sector, say Nifty 50 for the simplest of the ways. So if the market breadth of Nifty 50 is rising, that means from 50 it is going to 60, 70, 80. But the number of stocks which are participating in this rise are not enough. So that means only a few heavyweights are running the market. Then it is not healthy for that entire index. We need participation from many components from that index. So in Nifty 50, if you have 50 scripts, we want contribution from at least 50 or 60% of those scripts to participate in the rally up. Or when it is in the corrective mode, we want more scripts to be in the corrective phase, or in the column of O, which we ideally bifurcate using the point and figure chart. So I want more scripts in the column of X when the Nifty is rising. That means more scripts participating, and that means a healthy market scenario for that particular index. Whereas if only few heavyweights are participating in the rally, then there is a likelihood that this rally may, be just a temporary pullback, and then it may fizzle out. So it gives you a comprehensive idea of the strength of that particular index, and the combination of all these stocks which is pushing the particular index in the bullish or the bearish direction. In PNF, we have this wonderful way. If something is in the column of X, we consider it bullish. If it is in the column of O, we consider it bearish. Simple bifurcation. There is nothing like a doji. There is nothing like confusion create करने वाले कोई patterns नहीं है. So it gives me a objective way of bifurcating the stocks. And on the breadth scale, I use it into three major categories. 50, if the breadth is 50, then I term it to be a neutral breadth. 75 and above is overbought. Above 90 to 100, if the breadth is in this particular level, then it is still heated up rally. I would suggest that if you have any longs when the market breadth is so overheated, then you should at least have some hedge going ahead if you're taking a positional view, or you should trim down your position. I would suggest that trimming down the position is better, because any day taking home profits, nobody has ever become poor by taking profits home.
Can you show where you have arrived at this breadth?
Yes, sir, I'll come to that.
Yeah.
And below 25 is oversold, and below 10 is extremely oversold. Now 0 and 100 are the two extreme levels where one should be definitely cautious about your positions in market and how the particular sector breadth is doing. So let's go to a chart wherein this is a chart again on the zone terminal, wherein we have the Nifty. This is a candlestick pattern of Nifty, and the lower pane that you see here indicates the breadth of the Nifty. So this calculates the participation of the components of Nifty on a X% breadth. So the number of scripts which are in the column of X while this Nifty was rising, like in this particular case, you will see that the breadth is also improving, which indicated to us that this rise is a healthy rise and there is a participation from all the components from the particular index. In this particular case, like here, where in the breadth was almost above the level of 90, extreme level. After this, the Nifty started correcting and so did the breadth start correcting. So this was a strong downtrend and participation from most of the scripts from the Nifty 50 was bearish, and that brought the breadth on the lower side. And in such cases, when the breadth is correcting, we should look at shorting opportunities. When the breadth is rising, in such cases, opportunities for going long or taking long trades into the particular components in the Nifty would reward in a better way. So this is a overall understanding of how to treat breadth. Now, just the way we have divergence in RSI, we have divergence in ADX, MACD, all the indicators show us divergence. So does the breadth indicator show us a divergence with the price indicator. So here you can see this is a high which was made on 1st of November. This is a price chart of Nifty, and this high was made on the 1st of December 2022. Essentially, market was rallying, making newer highs every day. What was breadth doing during this particular period? See, breadth here from 86 to this particular December high dropped to 82, indicating that though the prices are rising, the participation from the components of the index is not in sync with the rise in the index.
Let me just interrupt for a couple of minutes. What it means is breadth was 86 and now it has become 82 on the chart which is shown. So when you say 86, that means 86% of the Nifty 50, that is 43 stocks were in a column of X. And then when it comes down to 82, that means 41 stocks. So basically, 2 stocks from 43 to 41 have converted from column of X to column of O.
Yeah.
And mostly they might have been the IT stocks. Yeah.
Right. And that is irrespective of the market making a new high.
Right.
So which is a alarming situation, that the participation is dropping though markets are making newer high. So that was a indication right here. And we know after the December high, we had a massive correction and almost like 1500 drop in Nifty. Nifty happened after that. Till the end of March, we were into a great corrective phase and every rise was getting sold. So valuable information again from the breadth chart could be, what you can garner. And same information on a price chart if it's reflected. Like here, this is that 11th November high and this is the 1st December. Price made a high. This was the first double bottom sell. This is a daily chart, 0.1% of Nifty. First double bottom sell. Still, I would say that, we will not be convinced that, okay, there is a bearish trend unfolding after this. Eventually, at least when the high of this anchor column, bullish anchor column was broken, at least at these levels, maybe, around 18,200, 18,100, one should have got cautious that, okay, there is a double bottom sell, another double bottom sell, and prices are just not ready to go and make a double top buy or a fresh high after that, indicating that the Nifty is exhausted and needs a breather after this, and there could be a downtrend which may be coming in markets.
You meant the low of the anchor column?
Yes, the low of the anchor column was somewhere around 18,100, 18,000 level. So at least if somebody would have missed out on this selling opportunity, I mean to say that looking at the previous trend, we may not, immediately empty out our portfolios, or we may not book out our cash positions. But at least at this point in time where it broke down a bullish anchor column low, people should have been careful and at least started looking at exiting their longs from the cash portfolio and sitting on the side, because for cash portfolio holders, what happens is these phases are very painful. They have nothing to do because it becomes very frustrating, and they look for a reversal. Okay, fine, there is a small reversal. Oh, chalo chalo, reversal aa gaya, let's get back into the trend और यहाँ से market ऊपर जाएगा. So but the ratio chart kept telling us that this is a corrective phase and no long should be taken for a little bit of time. So every long here could have been taken with a pinch of salt, that okay, fine, I should have my stop loss in place and I should be careful when I'm taking a long position. I should have some hedge in place. So the ratio chart, the breadth chart kept on giving that information right from 1st of December, that there is a bearish trend which is unfolding after this particular point in time. Now this is the recent chart of PSU Bank. This is the chart on 16th March to 28th March, where you can see the PSU.
This is the PSU Bank Index.
Yes, PSU Bank Index X% chart we are looking at. And this is the chart also of PSU Bank, and the breadth is also of PSU Bank. So PSU Bank made a lower low and the breadth was oversold. When I said extreme level of breadth, 0, it was at 0 on the 16th of March. And after that, it made a lower high. So 16 is the breadth that you can see here for the 28th of March. The price chart of PSU Bank made a lower low, but the breadth chart made a higher low, indicating that there is a divergence coming around and we should be careful with a shorting trade here. And what happened next? SBI, we all know SBI is one of the leaders from the PSU sector. We can see a first turtle breakout happening here. This is right on the 29th of March. You can see the time date also being printed out here. So anybody wants to see this divergence date, this is 28th of March that the divergence was formed. Next day, you can see this bullish candle also forming, indicating that there is a bounce which is happening. Similarly, a turtle breakout happened on a 0.15% 1 minute chart. The PMOX, which I usually use to take a trade. So a turtle breakout is my first indication. A bullish anchor is also my indication by, okay, fine, there is bullishness coming around. And when this PMOX dot formed, the green dot formed in a oversold territory, and the column reversal was the level that you could have gone long with double bottom sell as your stop loss. So column reversal somewhere around 524 level, and that entire rally till about 550 we could have enjoyed on the upside. So simple techniques and they work so beautifully, just that we need to match those dots. I feel somewhere matching the ratio lines or the matching your breadth reading along with your chart reading or the price chart. Of course, the trades are taken on price chart, so price is what we are looking at majorly, and PNF giving you that objectivity that okay, fine. And when this particular column of O was forming, I already knew where the column reversal level is. So that could have been the lowest risk that you can take in this particular trade and could have enjoyed this upside for about 25-30 points on SBI. Another example, so currently is again PSU Bank Breadth is at 100. So this is where it was on the 6th of March. And this is the reading of PSU Bank Breadth on yesterday, as on yesterday. So you can see the breadth is at 100. So what next? Is it going to correct? The price action will tell us. If we start getting a turtle breakdown and price is sliding below the must cloud, so we have our indication that there is a bearishness coming in. Price is telling us that there is a corrective move. Why not take a long put or short using your futures is what you can do.
Don't be too bullish on PSU banks. At least don't look at fresh longs at this stage.
Absolutely. And if you see SBI, this is yesterday's chart. I'm seeing This is a Renko chart, 0.15% 1 minute chart. It has formed a zigzag pattern in Renko. And there are these stars which are formed with the D-Smart line. I use this D-Smart line extensively for Renko, and it works so well and so beautifully. As such, Renko charts are noiseless and they give you a clarity in the trend and clarity of the price action. Coupled with this D-Smart indicator, wherein a star forms when the prices are too extended from the D-Smart line, which could be considered as a disparity line, and a reversal brick here means a star gets formed. One could have shorted SBI at the levels of around 548 or something, and yes, today I think it came down to the level of 536. So this target was achieved today in the morning when it came to 536 level. Currently, I don't know what SBI is doing.
It has gone up and closed near the high again at 545.
Again at 545, these levels. So let's see if these charts. Yes, yes. So, but 10 points down on a SBI is also not a bad trade. BTST trade hai, 10 points mil gaye. It's a good trade to take in positional bets, overnight ke liye lena hai. So good information, and yes, it works really well. This is now what IT, this was the same thing, the IT ratio charts that we talked about, wherein the Donchian Channel ratio chart, at that same time, you see 6th March to 12th April, the breadth was also giving us a hint here that breadth is at overbought levels, 90, and the breadth chart also showing that similar divergence. So when you club up two information from the ratio, from the breadth, and use it objectively with the P&F chart, you are sorted. You know what you have to trade. So this is the same chart of IT breadth chart from this period, wherein the breadth was at on the 12th of April, it was overbought. 90 is extreme overbought level, and then it dropped below to 0. In fact, on Monday, the IT was at 0, now surfaced out to 20. So, it's still into that oversold territory only. Let it rise up a bit and then give us the next shorting opportunity. This is the same information, the breadth chart information. I used it in the Renko chart to trade LTIM. So LTIM flipped below the D-Smart line. Anything below the D-Smart line is bearish for me. So the IT breadth indicating that there is divergence out here. And when the D-Smart line gave, the prices went below the D-Smart line and gave a one back, bearish one back pattern out here in Renko. It was one of the marvelous trades. LTIM was also remarkably down on Monday for about 8 or 9% after that. Simple trading setups, just a one back reversal. So, one brick above here was your stop loss, and the swing low breaking down and the continuation of the trend. And all this happened in the live market. This particular part is the gap down which has happened, but this is where you could have taken the entry in the live market with a one back pattern and prices sticking to the Donchian channel on the lower side, and enjoyed the breakdown in the IT chart. So you can see here I have the timestamp and everything indicates that you could have taken this trade in the live market, nothing on the breakdown or a gap down on the next day, and you would have enjoyed this downside in LTIM. So what I essentially want to tell out of all this is, spend some time on weekends, plan your trade, and then trade your plan. So if your levels, if your reading of the line chart, if the reading of the ratio chart and the breadth chart, try to combine it, make a process out of it, because process oriented trading helps to make money. Have some rules, be disciplined, and there is no we don't get money by catching the tops or bottoms in the market, but money is made by riding a particular trend. So this entire process helps me to identify the trend, and it helps me to ride the trend. Once once one method is followed, once you master one particular method, the rewards are going to follow. So it's just about practice. It's just about being process oriented and being disciplined in the markets. So this is what I do, and this is what I trade, and this is what I have to present in for the Rubaru today. Thank you very much again, AP sir. Thank you very much, Definedge team. And thank you, Prashant sir, for this wonderful opportunity.
Yeah, thank you. And just to conclude, you must have seen, viewers, it is important to inform here that though she says that master one method, the people might get confused because she has shown ratio charts, she has shown breadth charts, she has shown other features which are, in fact, 3-4 other features. But believe me, even if you use only a couple of them, you can still get good trades. There is no, of course, she is so used to all these features that it takes, for her, it's easy to use all those features, but it doesn't mean everyone has to use all those features. Like I said, once you open a demat account in securities, you have all these features free with the basic version. And you can try and start with only a couple of features, and then you can identify your own trades. And don't bother about kal IT ka result hai, TCS ka result hai, kya hone wala hai. As long as the chart is saying bearish, go short. If you are not confident of futures, you can always buy a put. Like she said, she had a put at 31 with a stop loss of 24. So there was hardly any risk in a put. So that's how a process-based trading works, and completely shutting out noise and only following the charts. And thank you, Mukta. It was definitely a very enlightening session, and we'll have more in the future. So thank you for now. And please subscribe to our channel, like it, and share this video with others who would be interested. Thank you.
Thank you so much, sir.